Want to learn the 5 most important types of accounts that form the entire foundation of accounting? This video will break down the 5 core ALICE accounts. A is for assets, everything a business owns. L is for liabilities, everything a business owes. I is for income, everything the business earns. C is for capital, everything the owner of the business invests. E is for expenses, everything the business incurs and has to pay for. We'll give you many of the common account names that fall under each category. By the end, you'll have a chance to test your knowledge to make sure you're ready to tackle real-world accounting challenges. Let's get started. Assets are valuable resources a business possesses. They can be non-current or fixed, meaning they'll be used for more than a year. Goodwill, the intangible value of a business's reputation and customer loyalty. Land, the property a business owns, not including any buildings on it. Building, structures a business owns, like offices, stores, or warehouses. Fixtures and fittings, items attached to a building, like shelves, counters, or light fixtures. Motor vehicle, cars, trucks, or vans a business uses. Machinery, large equipment used in manufacturing or production. Tools and equipment, smaller tools and machinery used for business operations. Office furniture, desks, chairs, and cabinets used in an office. Appliances, refrigerators, microwaves, etc., for business use. Electronics, TVs, sound systems, or other electronic devices. Computers, desktops, laptops, and servers used for business tasks. Printers, devices for printing documents. Assets can be current or liquid, meaning they can be converted to cash quickly. Stock, inventory, goods a business has on hand to sell. Debtors, accounts receivable, money customers owe the business. Prepaid expenses, payments made for future use, like rent or insurance. Accrued revenue, money the business has earned but not yet received. Bank, money held in the business's bank accounts. Cash, physical money the business has on hand. Liabilities are a business's debts or obligations. They can be long-term, payable in over a year. Business loan, a loan to be repaid over a long period. Property mortgage, a loan to buy real estate, repaid over many years. Vehicle loan, a loan to buy a vehicle, paid off over a few years. Tools and equipment loan, a loan for business machinery, paid back over time. Debenture loan, a type of long-term bond used to raise capital. Hire purchase, an agreement to buy an asset by paying in installments over time. Liabilities can be short-term, meaning they are payable in under a year. Creditors, accounts payable, money the business owes to suppliers. Bank loan, a loan that must be repaid within a year. Loan to pay salaries, utilities, creditors. Short-term borrowing for operating costs. Money borrowed, lender's money, investor's cash, various forms of short-term debt. Accrued expenses, expenses incurred but not yet paid, like salaries or utilities. Prepaid revenue, money received from customers for goods/services that have not yet been provided. Bank overdraft, the business has spent more money than it has in its bank account. Cash dividends, money owed to shareholders from business profits. Income is money a business generates from its operations. Cash sales, credit sales, revenue, money earned from selling goods or services. Commission, a fee earned for a service, often a percentage of sales. Royalties, payments for the use of an asset, like a trademark or patent. Proceeds, benefits, earnings, gains, yield, takings, various terms for money earned. Discount received, a reduction in the amount owed to a supplier. Returns outwards, a refund received for goods returned to a supplier. Bad debts recovered, money collected from a customer whose debt was previously written off as uncollectible. Capital represents the owner's stake in the business. Owner's investment, startup cash, personal savings, money out of pocket, partner's contribution, the initial money or assets the owner puts into the business. Share capital, equity, money raised by issuing shares to owners. Assets minus liabilities. This is the basic accounting equation, showing the net worth of the business. Retained earnings, profits the business keeps and reinvests. Fixed capital, capital invested in long-term assets. Working capital, funds available for day-to-day operations. Drawings, money or assets the owner takes from the business for personal use. Expenses are the costs of operating the business. Cash purchases, credit purchases, the cost of buying goods or services. Carriage inwards, carriage outwards, the cost of transporting goods to or from the business. Discount allowed, a reduction in price given to a customer. Returns inwards, goods returned by a customer that a business must accept. Rent, the cost of using a building or property. Insurance, payments to protect against risks. Fuel, repairs, maintenance, costs to keep vehicles or machinery running. Utilities, light, phone, costs for electricity, water, and communication services. Salaries, wages, payments to employees. Stationery, pens, copy paper, staples, receipt books. Depreciation, the decrease in value of an asset over time. Bad debts, money owed by customers that is considered uncollectible. Let's make sure you know the Alice accounts. Fixed assets. Goodwill. Land. Building. Fixtures and fittings. Motor vehicle. Machinery. Tools and equipment. Office furniture. Appliances. Electronics. Computers. Printers. Current assets. Stock. Inventory. Debtors. Accounts receivable. Prepaid expenses. Accrued revenue. Bank. Cash. Long-term liabilities. Business loan. Property mortgage. Vehicle loan. Tools and equipment loan. Debenture loan. Hire purchase. Short-term liabilities. Creditors. Accounts payable. Bank loan. Loan to pay salaries, utilities, creditors. Money borrowed. Lender's money. Investor's cash. Accrued expenses. Prepaid revenue. Bank overdraft. Cash dividends. Income. Cash sales. Credit sales. Revenue. Commission. Royalties. Proceeds. Benefits. Earnings. Gains. Yield. Takings. Discount received. Returns outwards. Bad debts recovered. Capital. Owner's investment. Startup cash. Personal savings. Money out of pocket. Partner's contribution. Share capital. Equity. Assets minus liabilities. Retained earnings. Fixed capital. Working capital. Drawings. Expenses. Cash purchases, credit purchases. Carriage inwards, carriage outwards. Discount allowed. Returns inwards. Rent. Insurance. Utilities, light, phone. Salaries. Wages. Stationery. Fuel, repairs, maintenance. Depreciation. Bad debts. Now that you've got the basics down, it's time to test yourself to see if you're ready to become a bookkeeping pro. Go. Bank. Asset. Cash purchases. Expense. Motor vehicle. Asset. Credit sales. Income. Property mortgage. Liability. Prepaid revenue. Liability. Owner's investment. Capital. Goodwill. Asset. Rent. Expense. Cash. Asset. Creditors. Liability. Discount received. Income. Debtors. Asset. Money out of pocket. Capital. Debenture loan. Liability. Office furniture. Asset. Salaries. Expense. Accrued expenses. Liability. Equity. Capital. Stock. Asset. Hire purchase. Liability. Bad debts recovered. Income. Tools and equipment. Asset. Retained earnings. Capital. Cash sales. Income. Bank overdraft. Liability. Accounts payable. Liability. Building. Asset. Revenue. Income. Returns outwards. Income. Assets minus liabilities. Capital. Discount allowed. Expense. Personal savings. Capital. Prepaid expense. Asset. Startup cash. Capital. Machinery. Asset. Cash dividends. Liability. Benefits. Income. Carriage outwards. Expense. Vehicle loan. Liability. Computers. Asset. Loan to pay salaries. Liability. Accrued revenue. Asset. Royalties. Income. Depreciation. Expense. Earnings. Income. Accounts receivable. Asset. Utilities, light, phone. Expense. Loan to pay creditors. Liability. Fixtures and fittings. Asset. Gains. Income. Drawings. Capital. Fuel, repairs, maintenance. Expense. Land. Asset. Inventory. Asset. Bad debts. Expense. Partner's contribution. Capital. Returns inwards. Expense. Proceeds. Income. Printers. Assets. Business loan. Liability. Commission. Income. Insurance. Expense. Appliances. Asset. Carriage inwards. Expense. Lender's money. Liability. Takings. Income. Stationery. Expense. Money borrowed. Liability. Share capital. Capital. Bank loan. Liability. Electronics. Asset. Fixed capital. Capital. Loan to pay utilities. Liability. Investor's cash. Liability. Takings. Income. Tools and equipment loan. Liability. Working capital. Capital. Yield. Income.